Just give me one sec. Hello everyone, welcome to this mashup webinar all about excise changes. My name is Luke Robertson, I'm the content producer for the Independent Brewers Association and I'm going to introduce our chair, Pete Phillip, who will be hosting this webinar all about the changes. Pete, how are you?
I'm great, Luke. How you?
I'm really good, thanks.
Just loving this Sydney lockdown to have when you're not having a lockdown.
Yeah. It looks like you're able to get out into the brewery at least.
The virtual brewery. That's about I don't know, only 5 years ago. The floor's never been that clean since.
Now, if anyone has any questions as we go, drop them into the chat and we'll probably pick them up at the end. I do anticipate a lot of questions for these, so we might not get to everything, but you know how to reach us otherwise. If you can't, we'll put some email addresses at the end as well for any questions. But in the meantime, Pete, I'm going to leave it to you.
Great, thanks, Luke. So just what you want on a wet, cold winter's Wednesday is accounting, right? Accounting and excise, two subjects that just get everybody riveted, right? So thanks for coming. Those of you who are watching live and or watching in repeat. This should be over pretty quickly. I think we'll probably knock this over in 15 minutes or so, the main content portion of this, and then we'll get into Q&A. So with me, I've got Jarrod Wilson. Jarrod owns a company called Craft Accounting and Advisory. And I've got Caraline Hill, who is the main excise guru at the ATO that we deal with on a regular basis and have for many years. So you've got a great panel here to answer everything you ever wanted to know about excise. So I'm going to bring up a presentation, share it. I hope everybody can see that. So we're just going to run through the major changes in the new remission process. If I can get here. Okay. So we all know how wonderful we are, 600 breweries. There's a pretty exciting time in the independent brewing industry. And it's these numbers that's really helped convince the government that our businesses are worth supporting with this excise relief. So that's great stuff, and we're looking forward to continuing to grow our businesses over the next years. This is what we're going to talk about: the changes, getting our cogs right, the new remission process. Then Jarrod's going to talk about accounting for the remission, issues that you should be considering as a business, and then we'll get into the Q&A with Caraline. So get your questions ready. So the changes are pretty simple, really. It used to be 100,000 that we could claim, and that was a refund based on 60% that you could claim on 60% of what you'd paid. So you had to pay it, and then you got a refund. Now it's up to 350. It's now called a remission process. So don't call it a refund. That's one thing the ATO has been clear with us. They want a change of system. So it's now remission because you're not actually getting a refund. It's you're not paying 100% of your excise up to that 350 level. So that's what a remission means. What's staying the same is that you still need to do your excise returns, right? We're going to show you the new form. You still need to do that excise return, and please do it on time. You know, during the pandemic, the ATO has been incredibly flexible with us in terms of allowing deferral of excise and being very, very reasonable in terms of if people had problems paying. So please, even if you can't pay it, you need to do your excise returns on time. So the excise return has changed very little. It's still a PDF form that you remit through the portal, and the qualification criteria still apply, which we'll actually touch on a bit later. This is kind of a summary of that in words. I'm not going to read this out to you. You can read it later. So this is the new form. There's a couple of extra columns. So whether you are applying the alcohol manufacturer remission to this line, that's just a yes or a no, and the amount. Okay, so in normal circumstances, if you're under the 350, that would just be the amount of that line item. And then that's all totaled down to the total alcohol manufacturer remission there. So no excuse for getting this wrong. It's pretty simple. You just need to be conscious of when you're approaching that 350 threshold. And we'll talk about how to do that in a second. So the next thing I've got to talk about really has not much to do with the new remission. It's really to do with getting your cost of goods sold correct. Okay, so I guess one of the temptations might be, well, I'm not paying this, so why do I actually have to account for it? Well, the reason for that is that you should always have a complete picture of what your actual cost of goods sold is. Doing that gives you an accurate basis for your pricing, and it doesn't distort your gross profit, right? So even if you're under the 350 threshold, you might not always be under the 350 threshold. Right? If you tick over that, you're going to have to start paying excise. And the important thing is that you've got that built into your COGS and your pricing of your products so that you're not being caught short. You're not being caught in a cash flow crunch because you haven't accounted for that COGS. So, we make a high quality product that's competitively priced, and we should be selling our products at a fair price that recognizes that quality. Trying to get a short-term advantage by not including excise into your COGS will lead to pricing distortion and possibly discounting. And before you know it, everybody's discounting, and all the advantage of having that extra excise relief is gone, right? Ruins it for everybody. So the purpose and how we sold this to the government was really on the basis that small brewers, of which we all are, small in the relative scheme of things, need additional capital to invest in their businesses, whether that's capability, capacity, people, systems, processes, right? This 350 gives us that. It's giving us additional gross profit or profit to the bottom line that we can spend on capabilities. That is, that's the rising tide that lifts all boats. And that makes everybody more efficient, makes everybody more capable. So I know I'm on a soapbox here, but it's something I'm passionate about is getting our products priced fairly in the marketplace and not distorting this. So this has the capability to distort that if people don't account for it correctly. So that's kind of why we're talking about this today. So the methods we're describing here that Jarrod will go into in a second will accurately track your remission and make it easy for you to track that and give you a balanced view of your COGS. So it's not the only way, right? So obviously you can run your business however you want, but this is what we consider best practice. Talk to your accountant. If it's not right for you, you do something else. This is not a legislative requirement. This is just a recommendation. So I'll just introduce Jarrod. Disclosure here, Jarrod is my accountant, our accountant for Wayward, has been for a couple of years. The advice that he's provided over those years has been very, very valuable. He also does the accounting for, I think, 5 or 6 other craft breweries. So he really specializes in this stuff. So I hope I haven't embarrassed you, Jarrod, but he's a good dude. If you have any accounting questions or you feel like you're not getting the right service from your accountant, I would highly recommend you get in touch, and his details are later on. I assume that's going to discount our bill next month, isn't it, Jarrod?
No, I'll pencil that in.
Okay. All right, over to Jarrod.
Okay. So guys, we'll go through 2 main categories. So smaller producers and then the large producers a bit later. For a smaller producer, as Pete said, when you do your excise return on a monthly basis, you still want to bring it in your accounts. So there's journals in the paper, you can go back to it later, but basically you want to bring in the remission as income and then bring the expense in your COGS. That'll help throughout the year. So once you get later in the year, you're coming towards the remission level, you know you need to change a few things. So what you don't want to find as a small producer is that you're selling your kegs at a certain level. So say you go into the market at 180 a keg, everything is going smoothly. You get to the remission level and you find out, oh, hang on, I've got to put my prices up. And you go into your customer saying, oh, look, by the way, I've finished with the remission. I need to put the prices up. It's not going to go down well. I've seen it before with web tax previously. It's not a good look. So what you also want to do in terms of the ATO is not overclaim on the remission. Once you get to that 350 level, you've really got to pull up stumps and not make them do the homework for you. The last thing you want is the ATO coming back to you saying, what's going on here? You're trying to overclaim. Also for small producers, so there's 2 ways you can kind of account for it, for your excise, and this is doing your actual excise itself. You can do it on production, which is a lot simpler. So you just declare each month what you produced, add and subtract your growler fills from your tap room, from your POS system, and Bob's your uncle. The other way is to do it on sales and transfers. So if you're doing it on sales and transfers, that's a transfer is when you're moving the beer to a non-bonded warehouse. It's a more complicated system. So, and that's how most people do it now. What I'd recommend for new guys coming on board is just run it on the production method. It's a lot simpler, a lot less chance for error, and run it in those terms. So moving on to large producers. So I know the temptation is for large producers is to push it all your emission into the winter months. Okay, it makes everything feel nice, warm, and cozy in those months where your brewery is probably not performing at the same rate it does for the rest of the year. What I would argue is that you smooth it across the entire year. So that is putting it, instead of the $350,000 in the first few months, you're pretty much spreading it via a journal, $29,000 per month over the 12-month period. I'll probably also note that back in the day, it actually used to be about a $30,000 rebate. So Pete and Kyle have done fairly well getting this $350,000 rebate through. So like I said, there's 2 ways you can do it. For the larger brewers, there's 2 steps to it. You smooth it out via a journal, but then you still report it as normal. So you're still bringing, per your journal, per your excise tax return for the month, you're still bringing that to account, but then by the time that remission finishes, it then becomes a payable. And that's all the differences there. Yeah, look, that's pretty much it for me. So Caraline, I'll pass it on to you.
Just before we go on, Jarrod, you can see the slides that are on the screen?
Yep.
Yeah, maybe just, you went through that pretty quickly. Maybe we just walk through just summarizing what Jarrod said, this is kind of summarizing this. Yeah, so this was talking about paying on production versus sales. So Jarrod was saying that basically paying on production is generally easier because it's chunkier, right? You could do it on each batch as a methodology, or you can do it on sales. I think that if you are a very small brewery and you know that you will never get over 350,000 in excise, then the doing on production does work. I know from a larger standpoint, you need to do it on sales. So if you are going to ever tick over the 350, I wouldn't recommend personally doing it on production because you'll have to change things later on. We have a slide here that talks about that journal. I think this is pretty self-explanatory. Essentially, Jarrod, do you want to just walk through this journal and we'll compare it and contrast it to the larger journal? Because you went through that pretty quickly.
Oh, that's all right. So this here is just basically in your profit and loss, just basically showing your income. So you bring the remission in. So as a whole, your business can see how it is tracking if the remission wasn't there. Okay, so you bring it in on a month-by-month basis. The excise tax expense, that's essentially a cost of goods sold. So that'll build up your cost of goods sold, because what you got to keep in mind is governments change, remissions and rebates change. It might not be there forever. Okay, so you've really got to make sure that your business is run properly, assuming that remission's not always going to kind of be there as well. Then, so like I said, so this is bringing in on a month-by-month basis. Once that changes, so once you get to the rebate level, so you've now used your $350,000 rebate, you then need to account for it as per normal, as you would be now, right? So then you would be just debiting the excise tax expense and crediting the accounts payable. But that's essentially just creating a bill like you would normally. There's not a whole lot of change there. So it's really the month-by-month journal, making sure that you're accounting for it properly and showing it as an income.
So I guess what's just missing off this slide, a small detail, is that debit to the excise tax expense is a sub-account of your cost of goods sold. So we're assuming that is like you would have a line item in your cost of goods sold for hops and malt and other ingredients and inputs, variable cost inputs into your cost of goods, and that excise tax expense would be a sub-account under that. And Jarrod's right, absolutely. That the bottom journal there is probably better done with a bill, right? It's easily done with a bill. So if we move over to larger breweries, so what I found personally for me is that we spread our previous refund and now the remission over the 12-month period. So basically, rather than having a massive rebate or decrease in my cost of goods sold in July and August, I smooth it out over the year. So it gives me a better and more accurate view of our cost of goods over the entire year. It's kind of like just applying pennies of it. So that's a little bit more complicated in terms of the journals. So do you want to just step through that, Jarrod?
Yeah, sure. So this is a slightly different method, but basically you're just using a clearing account. So these two will clear out by year end. So essentially you're using the clearing account. So you debit the excise tax expense, and then you credit the clearing account. So that's basically moving it to your balance sheet, right? and that'll sit there for the year. The journal underneath will sit there and smooth that out over the entire year, where essentially you just bring it in on a month-by-month basis. You can just do that by setting up a recurring journal in July. Your accountant or bookkeeper can set that up, but basically come year end, that'll have smoothed itself out. So
great. Okay. That's good. So basically that, rather than having, you know, in the most extreme version, if you were a very large brewery and you claimed you were paying more than $350 every month, wouldn't that be nice? Then yeah, otherwise you would have this massive $350 boost in July, and the rest of the months would be nothing. So you know, we do use up our $350 over the year. So instead, I've got this nice $29,166 in each month, balancing that out. So I find that's really useful. You know, obviously you can do it however you want, but I find it useful. So in summary, you know, what we're proposing here lets you keep an eye on your remission. It'll be very easy to figure out when you're getting close to that 350 level. That avoids, you know, quote unquote, accidentally just claiming it each month. So ATO takes a pretty dim view of doing that. So please do the right thing. You know, larger breweries, you know, we need to be making decisions based on that COGS, from month to month. So that's really good. Right. So what I'm going to do is pass over to any questions. If you have any questions, please put them on the live chat. I'm just having a look now. So one of the questions was the form. So the form is on the ATO site right now. So I guess the first question I've had offline that somebody asked is the eligibility criteria. So I mentioned that it hadn't changed, but Caraline, can you just summarize what that eligibility criteria is?
Sure. Can you hear me? Okay, so the eligibility criteria is that you must hold an excise manufacturer's license to manufacture the product on which you're claiming the automatic remission. You must have fermented or distilled at least 70% of the alcohol content of the product on which you're claiming or applying the automatic remission. And you must be legally and economically independent of any other excise licensed manufacturer that is applying the automatic remission. There is another rule in relation to distilleries, but which I'll just mention in case anybody wants to go down that path, is that by the beginning of the third financial year, the manufacturer must have their own still capable of producing a beverage on which they will apply the automatic remission. Legally and economically independent looks at things like if you've got two licensed manufacturers and they are set up under two separate companies, and those companies are both owned by the same shareholder and have the same director, that type of arrangement. We look at what level of control an individual would have across the different entities that would be holding licenses.
Yeah, that's a really good point, because, you know, we do have members that have legitimately completely separate operations in terms of their brands and their ownership and so on, but maybe sharing a production site. So, you know, if you had one production site and you had, you know, on the left-hand side, fermenters owned by brewer A, and on the right-hand side, fermenters owned by brewer B, and those two brewers are, you know, have different brands, different owners, is that those, I assume both of those would be eligible.
We would obviously have to have a look at and ensure that they are separate, and we'd be looking at whether one has the ability to control production or sales of the other, looking at whether they would then be considered to be legally or economically independent. But if theoretically, if they're operating quite separately, there are lease arrangements between, so if brewery A owns the premises, that there is a lease arrangement or some sort of formal agreement between the two breweries that gives the second brewery the access to the premises. If anybody was to be unsure, they can always apply to us for advice on whether we do consider a certain arrangement to be legally and economically independent.
So I think this idea has occurred to various people. I know I've had the question offline is, okay, well, let's say Wayward goes out and buys a smaller brewer, right? Maybe it's a brew pub that has its own manufacturing license. So now Wayward owns two licenses, right? Two excise licenses. They're separate production facilities. Can we claim two thresholds?
That would depend on the arrangement for the purchase of the second brewery. So if you were purchasing the assets of that particular entity, so the brewery equipment, the brands, etc., and you're either moving that in under the existing ABN or you're setting up a new ABN, then that would be there'd be a new license, obviously, there, but also if it's wholly owned, it would be considered that it's not legally and economically independent, and you would only be able to apply the total of $350,000 for the year.
Yeah, so the 350 really isn't tied to a particular license. It's tied to a particular ownership structure.
Yes.
Right. Okay. So just in case anybody feels like this is a great way to make an extra 350, the ATL will look through all of those sorts of things. And yeah, sorry, bad luck. Jarrod, you had another question, didn't you?
I think Caraline already answered it, the distilling one.
So if you were, setting up if you owned a brewery and you then wanted to set up a distillery or operate a distillery under the same license, it's a total $350,000 cap. And then obviously if you were to set up a separate entity for the separate distillery, we would have to look at the legally and economically independent element of that.
Look, at the risk of pulling off a Band-Aid that on a wound that may be almost healed, we had a fair amount of controversy last month because there were some members that were caught in a situation where really they had to clean up their 2021 excise affairs so that they could claim the rebate. Can you just walk through the rationale of why that happened, and like why it wasn't possible to kind of give those breweries an extension to pay off that and claim a rebate for 2021 into the 2022 financial year?
Yeah, so when the amendments to the regulations were written, it included obviously the transitional arrangements to move from a refund scheme to the remission scheme. In that legislation, there was a provision that said that for goods entered for home consumption, so in other words, having left the brewery or been consumed at the brewery, goods that had been entered prior to the 31st of May, but excise duty not paid till post 1 July, they would lose the entitlement to claim the refund. Now, I guess it comes back to the Department of Treasury is the policy owner, and the tax office then is the administrator of the law. So obviously we did have some people who were in the situation where they had entered into payment arrangements to pay off amounts that applied to goods entered before the end of May, but the arrangement had them paying excise duty post 1 July. So unfortunately, that was the way that the law was written, and we didn't have any discretion in how we applied that. What we did do, though, was contact those people that we were aware were in a payment arrangement and advise them of the change, so that if it was possible for them to have access to some funds, that they could do that and then claim the refund. And I am aware a number of refund applications have been lodged, and there has been a bit of a backlog, and we're working through those as quickly as we can to get them out to people.
Yeah, that's great. I mean, just for those that might have been caught by that situation, it was something that as Caraline said, the ATO doesn't make the rules; they just enforce the rules. And we made representations on everybody's behalf to try to find a way to allow that to happen. But unfortunately, given the short time frame that this all happened, it just wasn't possible to look at changing any laws. We would have never gotten any laws changed in time. So it was really a scramble. It was a little bit unfortunate, but I guess all I can say is that's what we're here for, in terms of helping you wherever we can. That's what the association's for. We will always do everything we can and reach out to the ATO. But I'd also, thank Caraline for being very approachable. And in fact, every person I've ever dealt with in the ATO has been pretty reasonable and pretty approachable. Be upfront and frank with your issues that you're having, and my experience has been that they've always tried to work things through. The way I look at it is we're a big customer of the ATO, right? ATO makes a lot of money out of brewers, but they call us clients and they treat us like clients most of the time, which is nice. So thank you, Caraline. I did get another question online. Okay. So perhaps, yeah. So this is contract brewing, right? So just I can give the background on the business side of contract brewing, because I've had the question from contract brewers saying, "Hey, will my brewer that's brewing my beer for me pass on the excise relief to me?" Now, generally, I think in almost all cases, those contract breweries, people producing the beer, will be paying more than $3.50 a year, right? So they will have used up all of their excise relief on probably their own brands. So they are not going to be passing on any kind of excise relief down to maybe you can talk in general, Caraline, about whether there are circumstances when a contract brewer, is there circumstances when a contract brewer can claim the rebate, or is it just impossible for them to do it?
If the arrangement is that they are simply paying a licensed manufacturer to produce the beer on their behalf, and they don't hold their own license, then they would not be able to claim. They would not be able to apply the remission, because they have to be a licensed manufacturer and be manufacturing the beer. So if they're not doing that, then they would not be able to apply the remission.
So, and And if you didn't have your own manufacturing facilities at all, there's no way you can get an excise license or a manufacturer's license. Is that correct?
No, that's right. That's correct.
Right. However, so is there a circumstance where you were producing 70% of your own product and you outsourced a small amount, like less than 30, and that product was being, there was a movement permission to move that to the contract brewer under bond? Is that a scenario?
So it comes down to whether you're actually manufacturing the beer yourself. So if you are simply contracting them to manufacture the beer for you and then move it under bond, you would only be able to apply the remission in relation to the product that you've manufactured yourself at your own premises.
Okay, all right. So that's pretty clear. So for contract brewers, yeah, you need to account for, you know, your contract brewer, the person brewing the beer for you, is not going to pass on the excise relief to you. You need to account for the full amount. And so, I mean, whether you have an excise license and you're moving it under bond and then paying the excise, or you are buying it from the contract manufacturer, excise paid, you're still going to have to pay it. Right, I think that comes to the end of, I've got no more questions in the live chat, unless last call, guys. While we're wrapping up, let me just thank Jarrod and Caraline for their time and putting together the slides. Thanks, guys. And you've got all of our email addresses there. So if you have any questions, then please get in touch. If there's no more, then thanks, guys. Lots of exciting things happening at the IBA. Obviously, you know, there's Sydney's in lockdown, but we've had a record number of entries into the indies, which is fantastic. I think double last year, which is just phenomenal. We are working out the judging of that at the moment, because that's possibly a challenge with lockdown. But yeah, expect more, and we've got some good news coming on a few fronts that we're working on. So upwards and onwards. Let's get out of this lockdown. Cheers, guys. Thanks very much.
All right, I've ended the stream.